Welcome back. Nairobi Securities Exchange NSE equity turnover declined sharply on the first day of trading this week from 340.8 million achieved as the markets closed on Friday last week, representing a 76.5% drop. However, despite the sharp decline, the number of deals went up to 1,161 Monday compared to the previous 1,044 when the bulls closed last week. There was also a decline in the number of shares that dropped by 56% to 3.9 million compared to Friday's 9.5 million shares. All indices were pointing north, with the NSE All-Share Index up 0.47 points, closing at 179.45. NSE 20 share index rose 0.33 points to close at 1,982.24, while the NSE 25 share index was also up 16.29 points to close at 3,911.79. Let's look at that data this morning, which sort of caps that information. You will see exactly where we're pointing. That's the NASI. You'll see it's pointing northwards. That's across June, although we've seen that drop that we're talking about there on a Monday. Let's cross over and see that equity share. And that's exactly where we are as well this morning. That's the equity turnover, sorry. And you can see exactly that drop that we're talking about. And it has been on the high in June, but then we're still experiencing that seesaw that we saw all the way back in 2019 as we're approaching to 2020. Churchill. So when we look at that information, when you look at all those indices, they're pointing northwards. But then we see that drop again. Are we going to look at a single stock, probably at Safaricom, to say this is why we went down despite all the indices pointing northwards? Is that how we synthesize that information?
In terms of the indices, we need also to realize a couple of things.
Yes.
When you talk about the NSE 20 share index, is principally a price-weighted index, whereby they look at the 20 largest stocks depending on some criteria. But then the largest weighting is given to stocks that have, say, a stock like BAT Kenya,
yes,
which yesterday traded at 469 shillings and 50 cents, and then EABL at 184 shillings. So those two stocks will have a larger weight as compared to Safaricom, traded at 41 shillings and 80 cents yesterday's session. So that is where, based on the swings, it affects the NSE 20 share. So if you get to the NSE 25 share and the Nairobi share index, that is market capitalization index, whereby the larger the market cap, the larger the weighting for that index. And that is where Safaricom, which has a market cap over 60% of the overall NSE index, Nairobi Securities Exchange, has a bigger weighting. So those are signs that you are seeing in regards to where the index are going up, yet the turnover, as you mentioned, is going down. When I speak about the turnover, and this is something that it has been prevalent in the Nairobi Securities Exchange,
yes,
whereby in any given day you find that foreigners account to over 60% of the day's turnover. Right now in Nairobi is a bit chilly, it's cold, but in the developed market, or looking at the US or the London, where a huge chunk of summertime. So Simba, give a choice between going to the beach or trading. There's a clear winner here that most of the traders might opt to go on a holiday. So we've been seeing even in those markets, there's been slow activity. There's been a dry up in liquidity because of the summertime. People have somehow closed shop,
yes,
apart from one or two events that they're seeing. But nonetheless, that's percolated in Monday's session. We could see even going forward during the summertime period in those markets, we will see some one-off days whereby liquidity coming down to lows that we saw in Monday's session. But nonetheless, still, that's what's the context we are playing up until September, thereabouts.
Pretty much. All right, let me bring in Robert Ocheng as well to weigh in on this information. Robert, all indices pointing northwards, fine. But then we look at that equity turnover, you have it pointing southwards. How do we interpret that as well?
Yeah, so just like Churchill has put it, we've seen that the big companies, in the recent past, we've been seeing some sort of recovery in our market, and actually it has been slower than most markets. We are one of the slowest markets when it comes to recovery from COVID. We saw like the Nigerian Stock Exchange, South African, the markets that recovered faster, like the US, and we are still in that transition, because if you look at some of the banking stocks from a value point of view, they're quite undervalued historically, and they continue to grow in terms of the direction where the banking sector is going. We are seeing equity growing strongly in terms of non-funded income, and that trend is likely to continue because that is not about lending. So as much as you have the short-term risk of non-performing loans, but if a bank can have its non-funded income grow by over close to 10 billion in a year, the equity had last year, then that's a very strong signal for investors. And so based on the activities that we are seeing in the market, I think yesterday the share price of Kakuzi rose by almost 9%, 9 to 10%. There are only 100 shares traded. So you can see that. And we have some short-term catalysts in terms of Liberty Holdings and Stanbic. We know that there's some short-term catalysts that are actually positive for them in terms of their majority shareholders in South Africa saying that they don't agree with us as local investors. We've undervalued these companies, so they're going to buy them from the stock market. But despite those positive sentiments, if you look at Liberty Holdings, the share price has been going up, but the volumes are very, very low.
Yes.
Which is something that is usually quite interesting. If you look at some of the share prices that are going up, someone can say, yes, I bought this company and it has gone up by 50%. But if you look at the volume, sometimes they cannot even make someone a millionaire. Yet you have so many in the market. So that's something that we look at in terms of volumes. I think the volumes have been low. And this is, in terms of trading, the NSE is basically a foreigners market. They have more belief than us. And I came to learn about this when I looked at an index by the Morgan Stanley, MSCI, that actually shows that if someone could have invested in that index, their portfolio would have been going up, despite the general sentiments that the market has been going down, because it is strongly weighted on Safaricom at 60%. They have the likes of EABL, KCB, BAT. So these are lessons that we are learning that other people are looking at our market. They're more keen than us, because for us, we're just going the general sentiments, sticking with sentiments like Tumi, Mumias, not knowing that as investors, our job is not to say what is wrong with the market, but what can we get right. So I think also there needs to be a lot of education so that we know that we are fishing. So when you go fishing, what matters is what you come out with, not what happened there, whether it was rainy or sunny, that doesn't matter. So I think we need to increase our financial intelligence as locals. Because to be honest, like when Safaricom CEO joined, Safaricom was trading at 26. And we had those sentiments that now is the time for Safaricom to collapse. And as we speak, the share price is at 41. It was actually hit 43.
Yes.
So the gains are over 500 billion in the last 1 year. So it's crazy. So, and this is happening right in front of us as we use Safaricom bundles, airtimes. So as Churchill has put it, it's because foreigners are sort of in a holiday and they drive the market. So obviously the volumes will go down. But it is a lesson to us. We need to bring this out so that we know that we need to be part of the game, and hopefully that will help us to drive the turnover up.
Pretty much. Just let me just take 15 seconds out of you, Churchill, this morning, because I want to bid you goodbye and bring in Josh to clear the show this morning. Churchill, there was a time, and I remember we spoke about this in 2019 when the advice was avoid the equity market, please go into fixed security markets. Is that the sentiment now in a 2021, or it's completely changed?
Well, that question, you'll get different responses depending on whom you're speaking with. If you're speaking with a portfolio manager who has a pattern, more likely than not, he or she will be looking at fixed income, and that's where we've been seeing the institutional investors. They have a higher allocation to the fixed income just because of the mandates that they have as opposed to the equity segment. Well, for the equities right now, the outlook is a bit uneven. We're still within the COVID-19, and then it's just getting down to the individual stocks such as KCB, equity. Most of the equity go to 12 months record high levels in the course of the last couple of sessions, just because of its tweak in announced or dividends for the next financial year. So those kind of, I think, is what will dictate even equities to see even with Safaricom with its entry to Ethiopia, equity, that dividend gain, a whole host of other corporate announcements, which will now drive the market in the remainder of the year. So that's my outlook.
Pretty much. At this point, I'd like to say thank you very much to you, Robert Ochieng and Chachila Ogutu, for taking your time this morning to speak to us. Let me rush over with Joash as we clear the show this morning, where ODM party leader Raila Odinga has outlined a draft of measures aimed at promoting a functional civil service in the country amid concerns of a frustrated workforce. In a statement, the former Prime Minister emphasized the need to turn around the service, which he envisioned should be defined by discipline, hard work, high morale, efficiency, and high ethical standards. Odinga is concerned that nepotism, tribalism and favoritism has become a major impediment towards the realization of an operational civil service that is said, or that has demotivated the workforce. He said more needs to be done to counter those three, to boost the morale of civil servants who is said often a majority never get to be appreciated as their hard work goes unnoticed. Now, the AU Special Envoy believes that eliminating conflict of interest, public mistrust, and poor and delayed services will be key in modernizing civil service. Notably, the former premier said civil servants should be allowed to spend time in private sector and return to public service. Josh, let's begin from there. They should spend time in the private sector before they go back to public service. Will that help things?
Thank you, Simba. I think, first of all, let me say, when the former Prime Minister talks about reforming the public service, I think that's a conversation that is long overdue.
Yes.
And you notice that in terms of managing the workforce, whether private or public, over the years we've moved from personnel management to human resource management. But when it comes to public service, I think we're still stuck at personnel management. So very archaic and non-objective ways to manage the workforce. When you talk about, I think part of his statement talked about linkages between the public sector and the private sector. And so when I look at it from a more practical point of view, I think what he's suggesting is that because some of these private companies exist in this market, and because they derive from this market, and because the public service constitutes a bulk or a good part of their consumers, then it's only fair that they assist in some sort of skill transfer and technology transfer from the public service to the private sector. So I don't think it would be practical to say all members of the public service should have a stint in the private sector. But I think it does make sense to call for your Safaricoms, your KCBs, your equity to have, for example, Safaricom is transforming itself into a technology outfit as opposed to a communications outfit. And so then there's a lot of skills and technology that can be then lended over to the government. So if you have people in say the Ministry of the ICT doing exchange programs at Safaricom, then you'll be able to see a level of skill and technology transfer that you otherwise wouldn't. But more importantly, I think the statement again points to a root problem in the public service. And I think the root problem is demotivation, yes. But what causes the demotivation? And it is the things you said: nepotism, your favoritism, your corruption. So I think in order to really reform the public sector, I think we have to go to the root causes of these issues. And so I think it will be bigger than exchange programs between the public and private sector. I think there is much more to be done there. Fortunately, we've seen this happen before. And if you remember, I think it was the late 90s, we had, when Daudi Tonje was at the helm of the military, we had the Tonje reforms. And that is why to date we have a military that is one of the most professional and one of the most disciplined on the continent and even in the world. And the reason you have this is because people in the middle have a very clear career progression, particularly at the high echelons. And so we know that it's predictable to tell who is taking over next and who takes over the position that they've risen from, and so on and so forth. So I think the same model, obviously the military and the public service are apples and oranges. So because when you're dealing with a disciplined force, it's very easy to institute reform. So expect that, even assuming then the former prime minister becomes president and embarks on this journey, you should expect a lot of resistance from the public service itself, because the status quo is definitely benefiting some members of the public service. And so you'll expect resistance, and it's not just because the status quo is benefiting people. Naturally speaking, people, particularly people who work in the public sector, are resistant to change. Because change is not something they encounter often. So it makes them uncomfortable, it makes them jittery. And especially when you talk about reforming a public sector that is riddled with dead weight. Because to be quite fair, and the thing probably the former prime minister won't say, because that won't get him votes, is that one of the ways to reform the public sector is to institute redundancies and laying offs, because we have a public sector that needs to be leaner and more effective.
Pretty much. Josh, now let's address the three areas that he looked at as well. He said nepotism, tribalism, and favoritism. How do you start to address that, Josh?
I think, you're trying to transform a civil service that has never been a meritocracy into one that now you want to operate based on merit. So I think there is hardware issues and there are software issues. So the software issues is the culture.
Yes.
And the culture is I mean, particularly when it comes to nepotism and favoritism, it's a cultural thing. I mean, you want to consider a tribesman before anything else. And some of these jobs, when they go to people from your tribe, they really don't benefit the tribe. I mean, it's an empty gifting of self. So I think that then we need to really look at the culture, the workplace in the public sector. Now, when you talk about corruption and again even nepotism, then that is where the hardware issues come in, because now do you have systems in place that direct career progression? Do you have, for example, people performance reviews? Are they done professionally? Are they even there in the first place? So you have to institute some of these hardware issues and hardware kinks. For example, performance reviews for every employees, they should be professional, they should be objective, and so on and so forth.
Pretty much. Now, let's talk about another area that is saying that majority of the work they do goes unnoticed. Yeah. Josh, in the civil service, let's look at it from that perspective. It's as if people who work in the private sector tend to get more noticed than the people who work in the civil service. Do you agree that is true, according to Raila Amolo Odinga?
I agree. And
is it true, Josh, though?
It is, and you see, recognition and is not entirely in terms of money.
Yes,
there are many other motivators. So when he talks of promotions, when he talks to, so there are many other ways to reward your public service as opposed to just salary.
Josh, I'm sorry to come in, but he also says that they look demotivated. But are you going to motivate somebody who works in the civil service? Is it not through money, Josh?
Money is just is one of the ways, that's for sure.
Yeah.
But when we're looking at our budget and how much we're spending on the current expenditure, and when we have the IMF helicoptering some of our policies, then it will be very difficult to say that the reward will have to be money. So you have to, as an employee, you have to be innovative about how you motivate the people who work for you. And so I'll give you an example. And mind you, Chacha, when you say that people are not recognized for what they do, it in the same breath means that people are not recognized for what they don't do. So if you're not recognizing performers, then at the same time, you're not recognizing non-performers. So we have to have systems in place where performance is rewarded and non-performance is punished.
Yes.
And so I'll give you an example. For example, in the research institutions, you have a lot of these researchers who spend hours in the lab coming up with new breeds of agricultural products and so on and so forth. But these are hardly ever brought to the commercial market. So as a researcher, and I work for government, if in terms of my output, if I don't see it commercialized, then it's a demotivator, because you are working for the sake of working. You're not working towards a goal or an end. And so when you talk about linkages between the public sector and the private sector, then some of these are the issues that you could probably be talking about.
Pretty much. All right, Josh, lastly on this issue this morning. Now, Josh, people say that they're not fully motivated, but is it not known that across the board, majority of Kenyans will want to get into public service as opposed to working for private companies in the country?
That is true,
so does it negate his statement then, Josh, that, well, they look demotivated?
I think people want to get into public sector for various reasons. Not all of them are pure in intention. I think one of the things is that the public sector is a very stable employer.
Yes.
But the second one is what he was talking about the conflict of interest. People want to get in there because they think there's money to be made aside from the salary. And so if you get rid of the conflict of interest, if you get rid of the corruption, then you'll have people wanting to come into public service because they're passionate about serving in the public service as opposed to coming in with ulterior motives.
Pretty much. Josh, lastly now, from where you said it this morning, when it comes to reforming the civil service, where should the government start from? Because it looks as if Raila Amolo Odinga has envisioned everything.
I don't think...
And Josh, sorry, but let me just also come in on that last part again, where he's suggesting that they should go to the private the private sector before they're back to the public sector.
I don't think he has envisioned everything. I think what I like about our politicians, particularly during campaign season, is they are very good diagnosticians. so I think what he's done is he's diagnosed the problem really well.
Yes.
I think it's heavy on diagnosis, his statement, but very light on solutions. So again, one of the solutions he proposed was the exchange programs. And by the way, he didn't actually put it as exchange programs. I'm only interpreting it because from a policy analysis perspective, that is the only thing that sounds practical and makes sense.
Yes, yes.
So maybe I'm being a bit generous to him by trying to further develop his idea. But as I said, I think the diagnosis is perfect.
Yes.
I don't know how it would. I mean, I haven't seen the modeling in terms of how you'd implement this, so it's very difficult to critique the implementation part. But to answer your question, how to reform the public service, I think one of the ways to begin would be to look at, we have public organizations, and in this state, let me talk about state corporations that are not your Kenya pipelines, that are not your, your Kenjans, that are not they're not the big money make organizations, but you see a lot of very good performance in those organizations, particularly in the agricultural sector. So you have institutions like the Kenya Plant Health Inspectorate Service and others. And so perhaps it would be important to pick those organizations that already have a track record of public service reform, and then use those as a pilot, and then institute the immediate reforms there. And then once you have a pilot model that is functional and is working, then you can extrapolate it to the rest of the civil service.
Pretty much. Josh, thank you very much for coming by. So probably the only way we would know what he wants to do is if we vote for him. I don't know. Is that what this statement is?
I suppose, as a political analyst, this is the time we make money, so I wouldn't want to say one way or another. Let me leave myself open for as many offers as I can get.
Maybe you're part of the team that's going to give him a strategy out of this.
Hopefully.
Josh, thank you very much for coming by.
Thank you, Simba.
Anytime, man. Actually, we're at the tail end of the show. That's it. Taking back online at Metropole CBK across all your social media platforms. I am Kiage Simba. I'll see you at 10, 11, and probably 12 for your news. Good morning.